So it is midday, Tuesday the 8th of September, and I want to have a look at oils. So before I do that, I want to kind of just interesting to me that when we had this, we had a big move lower in February and March, when we had that kind of big correction early in the year. And what was interesting to me was that not only did equities drop, but oils, commodities did as well, even including digital commodities, the cryptos. They all headed lower, excuse me. So just interesting, because it was almost as though there was just this mass exit of cash from the markets. And so I'm just noting here, before I go on to oils, that gold appears to be setting up for a bearish breakout from 1900, probably down towards 1800. So just observing and commenting on that. And I also see the cryptos potentially, let's have a look at them, are also kind of not super bullish at the moment, and which leads me to oil. So we've been talking about this for a long time, and I think it's now pretty much the case. So if we go to the monthly chart for any of the oils, doesn't really matter. Do I have my, there we go. So we have a monthly downtrend. One of the biggest distinctions between oils and the metals is, generally speaking, the metals have a monthly uptrend. The oils have a monthly downtrend currently, made up of lower highs. And I've been talking about this for a while. Effectively, we had key support resistance or significant price levels at the around about the $40 mark and around about the $50. And I was talking, you go back a month or two, it's highlighted this area, saying that this area is a reasonable area. If the trend is going to continue, this is a reasonable area for it to do it. And so price is now doing exactly that. It is now currently producing a bearish candle on the monthly time frame within the moving averages, which is an area of equilibrium, and it's doing it around about the $40 level. Personally, I prefer it if it does it at a level. I like, to me, the basis of every single market behavior should be at turning point at any rate. It should not be randomly it should always be at a key level. So at any rate, this appears to be setting up to resume. It's done a nice, healthy retracement. We can measure it for fib levels. So I'm just going to move my video here, measure it. Let's just see if there's anything there. So it's tapped the 618 on the nose. So there we go. That's pretty cool. And then just to double check, or just to see if there's any additional layers, and it's tapping a 50% fib level from a prior retracement. Okay, so that's good. So we've basically got a cluster of Fibonacci's, and it's producing that bearish candle. So basically what I'm looking for is for this to close as a bearish candle for next month to break the low. And then the implication being that the downtrend is likely to continue, which will provide solid tradable opportunities over the coming weeks. Actually, the thing is, we've got about 2.5 weeks, 3 weeks before this actually closes. But this is something I can start looking for now. And then if it does continue down, that means there's probably another couple of months where there's potential short-term opportunities, if that is going to continue down towards $20. So to me, it's safe to anticipate that it'll take a move down to $20. If the trend is to continue, it'll obviously go lower. But we had this upset where it went down to 0. And so we'll see how that goes. But I think down to $20 is a feasible distance. And then there'll be opportunities on that side. And this is pretty much the same for all of the oils. What was interesting to me, and I didn't make any comments on it on any of the social media, but I noticed that, especially if I just go to my other list here, I actually noticed the move lower not occurring in the main stuff. It was occurring in other oils, like heating oil had started to head low. It's beautiful, like really, in terms of trading commodities, there have been some solid, like relatively easy money-making opportunities there if you have access to it. One has access to these, and that's following low. And look at the quality of that. It's primo. It's good quality stuff, and also no lead. So I just noticed on the other oil type of commodities, there was a move lower that was actually leading those. So to go back to oils. So US is really what I'm looking for to continue to set lower. I've got a 1 hour, a 2 hour, and a 4 hour here just to show you the quality of the trend. So that means that both intraday or day traders will be taking advantage of the moves on the lower time frames. Swing traders will be taking advantage of those moves on the higher time frames. And it's a pretty strong trend, and it looks like it's going to provide some decent opportunities. If I go down to 5 minutes, okay, there's a similar quality trend. So I think going down below that is a bit silly, controversial statement there, but the quality of the trend is good. I mean, this is insane. So this is the kind of thing that's where your money is made when you have a really good opportunity, making hay while the sun shines, so to speak. So that looks really good. And that's going to be the same approach on West Texas Intermediate, which looks really good. Some flat level breakouts, continue to trend much lower. Brent crude is looking really good as well. So to sum up, the opportunities are there on pretty much every time frame. Looks as though it's now falling in line with that monthly, with the monthly flow of price, I guess. And that's the daily having broken below the $40 mark. It's now free to head down below that. Any pullbacks and retests are, to me, sensible entry opportunities, especially if they connect with fib levels. So we've got all that evidence there as well. This is the kind of, to me, this is probably going to be one of the better money-making opportunities throughout the next few weeks. All right, it's safer. To me, equities are wobbling a little bit, but oil is looking like it's finally caving in and just starting to head down. For now, obviously, as soon as the quality of that trend changes in some way that it shouldn't, then of course I'll slow down on that. But until then, I really like the look of this. And again, just to kind of reiterate, going down to those lower timeframes, so I might look for some trading opportunities here, but this will be my expectation. Now, obviously, naturally, over the coming weeks, if it does, let's say hypothetically that it's going to continue trending over the next couple of weeks, or even over the next couple of months, there's going to be daily retracements, there's going to be 4-hourly retracements, there's going to be even potentially weekly retracements. But it doesn't really mean that the longer term prevailing trend is into the downside. So the risk is really in getting in too late, trying to chase the trades, not managing risk, kind of piling on the account size onto this, 2-3% or more per trade, not trading with a stop loss. Those are all the things that are gambling approaches, as opposed to sensible, get in here, take profit, get out. Look for another entry, get in, take profit, get out. All right. There will be retracements. It will become overextended. There will be times when those, for a few days, it's not going to be tradable, and then it becomes tradable again. That's it. So I wanted to draw your attention to this. I wanted to show you that there are some good trends on multiple time frames. There should be multiple sensible entries, I would say, at least from the location of the moving averages, which is where it achieves true value or closer to real value, and then it becomes overextended. And of course, I'll be trading with a stop loss, and of course, I'll be taking profit as I go, because as they say, nobody ever goes broke taking a profit, and I'm not going to be unreasonable and expect this to be a 10-to-1. I'm looking to take as we go. So just drawing attention to this, and obviously as individual setups come up, I'll probably post on those. But for now, I wanted to show you why oil is going to be on my dashboard or on my watch list for the near term. And this was a dedicated focus video that I think would just fall in as part of my general analysis, but I think it's worthwhile talking about this. So there we go. Thank you.